Welcome to the WanderLearn show. I'm your host, Tapon. In this episode, I talk with Clem Chambers. He is a financial analyst who makes some predictions about the markets and just analyzes the markets. And we specifically talk about Bitcoin and the cryptocurrency market, but we also talk a little bit about real estate as well as the stock market. And I value his words, not just because he's written for Forbes for about 20 years or so, but also for the fact that he's been surprisingly accurate on many of his predictions, certainly about cryptocurrency. So you might want to listen to what he has to say for what's going to happen in the year 2026. I'll be coming out with my own predictions at the end of 2025, and you want to look for those. But for now, enjoy this conversation with Clem Chambers. I'm here with Clem Chambers. He is a man who has made some brilliant predictions about cryptocurrency and the financial markets in general. So welcome, Clem.
Nice to be on. Thank you for having me.
2024 article suggested you were going to break the old 60K high and you would have a reasonable peak for the halving cycle would be around $120,000. And what was the high? The real high? Right. So let's do your victory lap. Tell us a little bit about what was going through your mind way back then and how you arrived at that.
Okay, as far as I'm concerned, crypto has a 4-year cycle driven by Bitcoin. And Bitcoin has a 4-year cycle which is driven by the halving. And so you've got the situation of half the supply, same demand. It's, chapter 2 in basic economics, that if you've got the same amount of demand and half the supply, up she goes. Now, there's all sorts of permutations. You can say, well, there's all that Bitcoin that's getting lost, that's a shrinking supply, yada, 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 yada. But that's just a fundamental thing. Every day, there's half coming out than in the previous 4 years and half of what was the previous year before that. So back into 2016, 17, when I really got serious, I thought, well, this crypto cycle, that's kind of interesting. They just had one of them. It's going to go up in it. And, it went up from what I bought at a couple of thousand to 20,000. And I thought, oh, I like this. And, the thing about Bitcoin is that you tend to get an epiphany. When I first wrote about it back in 2014 or 15, going right back to the very beginning, I'm in a cab, it's 2012, and a cab driver says, have you heard about Bitcoin? And I go, yeah, I have actually heard about Bitcoin. I went on to, Silk Road? Because someone said, Silk Road, that's really interesting. So I went on Silk Road and looked at all the guns and cash at a discount and all the precursors and all the terrible stuff that it was doing. And the Bitcoin, because I wanted to buy Bitcoin. And I thought, I'll buy 1 million Bitcoins. So that sounds like fun. Ooh, $90 a Bitcoin. Ooh, that's like, oh, I don't think I could buy 1 million. That's no fun. What do you mean? For $5,000, I'm only going to get, a few hundred. That doesn't sound like fun. And this site scared the hell out of me. And so goodbye. It was a great idea. And then this cab driver goes, well, I was into it right at the very beginning, and I made a load, and then I forgot about it. I forgot about it. It was fun. And then, it's 110 a Bitcoin. I've got 80 grand's worth of it. And I thought, when the cab driver is telling you about something, forget it. That's one of the golden rules of investing. When the cab driver tells you should get into something, don't bother. So I thought, okay, yeah, well, that's the end of Bitcoin then, isn't it? So
you should short it.
Yeah, well, no, I don't short things. It doesn't suit my digestion. And so a couple of years passes, and it's getting, it's $1,000. Well, that's a bit wild. And it's one of these bubbly things. So I wrote an article in Forbes, Bitcoin is a bubble. And then about, 3 months later, suddenly flash of light comes out of the sky, hits me on the skull, and I go, oh. And I wrote another one saying, oh, Bitcoin isn't a bubble. And I looked at it, and I thought, I need to be buying this. So now we're 2017. I buy a load at $1,000. It goes to 20. Thank you very much. Yeah. I'll buy some houses with that. But it's coming down now. That's enough. It's way too much. Actually, the truth is I sold about 18,000. And down it came. Oh, halving, up like a rocket, down like a rock. That's the cycle of these sort of things. It goes down. It does a crypto winter. I'm looking at it and I go, ooh, buy a load more. Up it goes again, this time to 60,000. Sold out at 38, doubled up in all the crazy altcoins. I mean, I bought what the devil's thing, the thing's called. It's changed
Luna.
its name. No, it's much better than that. A Polygon, whatever it's
Oh,
called this
Paul.
week.
Okay. Oh, it's
Yeah, I bought
Matic.
what Matic, that's what it was called back
Yeah.
then. I bought it at
Mhm.
3 cents. It went to four. I bought a lot at 3 cents. I think I
Mm.
had a million or two. And I think 1.4 million of them. Anyway, and then it goes to $4. Well, actually, I sold at 28 cents. But I made a nice chunk of a change at it. And
Yeah, yeah,
so
yeah.
I parlayed that money into several, several $100,000 from nothing trades because
Right.
that final leg, oh, I've made a yacht. Thank you very much. Snap a bit of the yacht off and then go gambling with it in the crazy stuff at the end of the vertical and then managed to double my win by doing that. And then it does the top and goodbye. And then, of course, it went back again because it was a double top because of Afghanistan and all the Afghan ministers of theft turning their dollars into Bitcoin and heading for the airport. But anyway, next winter comes along. I kind of do the same. And it's the same. It's the double. It's double. So it went to 60. It came back. I thought it was going to come back to 13. It came back to 18. And this is all in Forbes. All these numbers are there. Came
Mm.
back to 18. It goes up to 100. And I go, 5x. Thank you very much. I don't care about the 6x or 7. I just don't care. It's enough. Goodbye. It's done its double. And I've got a downside of half. And I've got an upside of 20%. Thank you very much. Goodbye. You can have that.
Mm. Yeah.
And here we are today. So the question is, now that we're in the crypto winter again, or the late autumn or early winter, it's going to go down how far? 60 to 40,000. I look at it and I go, well, it could do 38, it could do less, but let's just say somewhere between 60 and 40. And then in 4 years' time, is it going to go to 250? And that's the not $64,000 question, the $250,000 question. Is it going to have another cycle? I have my doubts because up until this time round, Wall Street did not have its fangs into the Bitcoin. And
Right.
now its fangs are in the Bitcoin. And when the market does that, Bitcoin does that at the same time. They're now
Mm.
welded together. It's no longer the anarchists, libertarians answer to all the bad things in the world. It's now just another asset. So is it going to do it again? So that is the question. But there is another wave, but it isn't necessarily going to, or it isn't going to be cryptocurrency.
Right. Well, we'll get into a little bit more of that, but I want to, first of all, plug your new YouTube channel. I wish I had known about you before I made my 2025 predictions. I make my annual predictions, around January 1st, and we'll get into that. But first, plug your new YouTube channel and how people can find you.
Well, look, there's only one Clem Chambers in the world that's living.
Yeah.
There's a few people who fought in the Civil War, I believe, and by now there should be some youngsters called Clem Chambers. But over many, many years, I've been a Google whack. Okay, so if you go onto YouTube and type Clem Chambers, you'll find me. Clem Chambers Alpha is the channel. But
Okay.
is only one Clem Chambers. And if you go out and start naming your children Clem and you're called Chambers, I'm going to be very annoyed because you'll destroy my uniqueness. But no, go ahead. I don't mind. I'll take it as an honor. But
Right.
you'll find me. And I've got a Substack called Clem is here at Substack. And I've only just started them because of YouTubers like yourself. And I've had
Mhm.
so much fun doing these things and had such good feedback from viewers that, it's become one of the things that I enjoy the most doing.
Yeah, so I did my 2025 predictions in January 1st. I said that Bitcoin would go maybe up to maximum 150. I thought it was going to be less than that. And then I said that, but it would sometime at the end of 2025, sometime it would bottom out at $50,000. So I
Still could
was
happen.
kind of a weirdo in 2025 because everybody was predicting a massive bull run to
A million,
200, 300,
20
a
million.
million, right? And about a few months ago, I ran into you, Clem Chambers. I ran into your. I was like, oh my God, there's one other kind of what I thought sane person who understands that Bitcoin not necessarily is going to go to a million overnight, or in a year or two. It's going to take a long time to get there, and that you had the rare combination of being a bull, but also a realistic bull and understanding that things go down. And so many people are just perma bulls or just perma bears, and Bitcoin's going to zero, etc. So I really appreciate that you had said another thing that was pretty. You said it was sensible that 110 to 120 was looked sensible, while 150,000 was not impossible, quote
Yeah.
unquote, not
Yeah.
impossible, but would be more stretched. It would be a total stretch goal. And that's kind of, so when I saw that, I was like, wow, this guy was like predicting the absolute stretch goal was 150. I had said that the same thing. I was like, this is great. But where you nailed it is that you got it right to the dot on 120 basically. And I think now let's talk about the downside, because I had said around 50,000. It sounds like to me you're going between 40 and is it 60?
Yeah, it's 50. Funny enough.
Okay. Okay, yeah. So and so people are listening to this. I mean, now they're starting to believe you more, because right now I don't know what the price of Bitcoin is sitting around, but it's around 90,000 ish.
Yeah. Yeah.
And so tell people why. A lot of people think this is just a pause. They'll say, Clem, that hey, on every bull run we have 30% pullbacks. This is like business as usual. We're gonna like go up to 200, 250, 300, and onward. Why do you think no? We're gonna go down before we go up.
Well, I don't disagree that Bitcoin has pullbacks, but it's not 25%. It's 75%.
Right.
And Bitcoin is the most fizzy and friable asset out there. It's because if you think about the audience, okay, the audience, generally speaking, is very young in comparison with the stock market. Yeah,
Correct.
it's very it's a novice audience, a tyro audience. I think that's the old-fashioned word for it. I.e., they don't really have a Scooby-Doo, as the English would say. Yeah, so it's their first time round. So they've never been beaten up in the markets before. And, old geezers like us, we've taken a few punches to the temples and we go, oh, there it is again. Or, hey, we bought something and we made a load of money and then it went over the top and we held it all the way back down and lost it all again. Oh, we've seen that before. We've been here before. And a lot of the audience have never seen anything. They've just stumbled into it, or a mate of a mate of a mate, and they put $20 in, and then they've got 1,000, and they go, "This is glorious. I have no idea what I'm doing," and that is the audience. It's the novice audience. Now, you only have to go and look at the altcoins to see the carnage in that market, to see what the audience is like, and it's a hybrid market. Which is has three sorts of people: people that are serious about investing and trading and have some experience. There are people that are there because they believe in crypto, but they don't really know what they're doing. And then there's the straight gamblers. And there's a lot of straight gamblers. And, if you go to something like pub.fun, which is, you try to do any of that in equities, you would go to jail pretty quick. And there's thousands of people having fun. I think it's fun. I'm not sure, but it's a rolling um, banquet of insanity, and
Right.
and a lot of people are enjoying it. Of course, when they lose money, it's oh, mummy, mummy, it wasn't me. I didn't do it. It's all their fault. And when they make money, they say, yeah, I'm a genius. I'm a genius. Oh, I knew that was going to happen. Yeah, yeah, yeah. And that is what the crypto market is. It's a new format. It's a very exciting format for gambling, and the investment side, the actual sensible behavior side. It's very narrow, very very narrow road. But from an old hand like myself, I would say if you've got a portfolio of 100 grand, yeah, nothing special, 1,000 should be in crypto. 1%. It's a little sprinkle of chili powder on your meal. It's not, drinking it straight out of the bottle.
Right.
And as a part of a diversified portfolio of risk, why not have some crypto? But when you hear someone saying it should be 10%, no. When they say it here at 5%, no. 2.5%, probably not. 1%, yeah, why not? Yeah. And
What
remember,
about you? What is your percentage of your portfolio? Is it around 1%, or
right now,
you?
right now, no.
Okay, but
I'm
like
completely
okay, so
gone.
then let's say 2026, 20. Will you'll allocate some more? I
Before
imagine.
I before I sold down, I'm guessing. You see, you put 5% in because it's the bottom of the market and you're bullish. Pretty soon that becomes 25 to 30%.
Yes.
Now, at that level, unless you really, really know what you're doing, you're breaking all the rules. And in fact, even if you really,
Mm,
really know what you're doing, at least you know you're breaking all the rules.
mm.
And my strategy on those last three loops was getting at the bottom. I'm a bull at the bottom. I'm a bear at the top. Yeah, it's like I mean I'm a raging bull at the bottom when everyone's going, oh, it's all gone, oh, woe
Right,
is
right.
me. I get so I'm really really aggressive, and then when it
Yeah.
goes up a bit, I go, oh, that's good, it's going there. Halfway up, I go, oh, I start sweat now. I said, yeah, I'm making a lot of money now, and I could buy that Van Gogh. And then it goes up more, and I go, oh no, ooh, it's nearly exit time. And no, actually, if my exit is say 100, I'll get out at 87. I don't care. I'm gone. Which is why I got out at 100 because it was
Mm.
going to 120. I really don't need that last bit of stress. There's no stress at the bottom. There's no stress a third of the way up. It starts to get interesting halfway up. When it's three quarters of the way up, what are you doing?
But hold
Why are
on,
you still there?
hold on. But you said I don't need that extra 20%. And of course, that is precisely correct in retrospect. But when we were sitting at 100K and a lot of the people are screaming, we're going to 250 and above 300 and a million. They're saying, wow, you're getting out at 100K. You're not missing 20%. You're missing another 2X, 3X, 4X, right? And so
I
how
don't, I
did,
don't, I don't take much notice of children.
okay. Okay, good.
Yeah, and also you've got to remember that the people that are being communicated to like that, they're what's and I didn't learn. I learned this in crypto. This phrase, I never thought of it like this, but it's so true. They're the exit liquidity. They're the
Right.
people that are going to buy when I'm selling.
We need them.
I just don't. I've got a 5x. I don't
Mhm.
need 6x.
Right.
I don't care.
Speaking
I've
about
got
5X,
5x.
you had predicted again correctly in the middle of 2023. There was a roundtable comments that were floating around, and you said a possible downside of $13,000 back then, and the actual we were around 15,000. So again, the downside you hit the floor as well as the high, and I congratulate you on that one as well.
I mean, it's years of experience, and also I draw all sorts of charts. And anybody that's into technical analysis look at my charts and go, "What the hell are you doing? What is that chart?" And I go, "Well, I get a Crayola," and I go, and that's how markets operate. If I can't do it with a Crayola, I'm not drawing the chart. I just
Right.
want something that there it is, obvious. It's like gold, which I called a few months ago before it took off from 2000. It's
Mhm.
like if it goes there, it's going to go there. I mean, you should be able to see that. The point is, people go, "Oh, I want to know what copper's going to do in the next 10 minutes or next 10 days or even next 10 months," and the chart is not loaded. It's just random. It's just flapping about, right? And they go, "Oh, I've drawn 47 lines on it, and it's going to go up." No, you got to look at all the charts, and you've got one that you go, "Whoa, look at that! Wow." I
Mm.
mean, I could show that to my dog, and he would agree. Yeah, and then you could get in there. You don't need to be able to predict 99 charts out of 100. You only need one. And going back to Bitcoin at 100, right? There's always another bus. There's always another bus coming. I don't need that other X. I don't need it. There's another bus coming.
Right.
Now, it might only be 25% on that, and it might only be whatever it is, but it's another bus. You don't have to lash yourself to the rowboat like, whoever it was, Ulysses, yeah, or the ancient mariner, or do a Moby Dick. Bitcoin, it shouldn't be your Moby Dick, right? It's like, I was in Bitcoin, I did really, really well. I paid off my mortgage or whatever, and here I am.
I think Confucius
Yeah,
said,
there's another bus coming.
he who's attached to things will suffer much."
Yes, yes, yeah, particularly assets.
Of
I mean,
course.
I get attached to certain assets, but they're all antiquities that I get attached to, and I would never sell them. And I bought one today. I mean, I drink my red wine out of a Roman glass. This is
Ah,
Roman. This is
okay.
2,000 years old,
I'm
and I
so
would never sell
glad.
that.
I'm so glad. Sometimes I wish my mom, she has these old glasses from France. I'm like, let's just use them, but they don't use them. I'm glad you're just using it as your everyday cup.
Yeah, yeah. I mean, you can. There's a lot of beautiful glass from the 1700s, and it'll cost you a couple $100. You can buy
Mm.
ancient glass. I mean, you can buy Roman glass cheaper than you can buy a nice piece of crystal from some crystal maker selling on the Fifth Avenue.
That's
Yeah,
great.
but that's an asset I can get attached to. But then it's not an asset anymore. Then it's just a thing.
And that ends this episode of the WanderLearn podcast, where we explore travel, technology, and transformation. If you'd like to see the show notes with links to what we've talked about, go to wanderlearn.com and click on this episode. If you'd like to connect with me, just remember Tapon. That's my first initial and my last name. Tapon is always my social media username. My website is ftapon.com. Do you want to leave me an anonymous voicemail where you can make a comment or ask a question? Then go to speakpipe.com/ftapon. Furthermore, if you'd like to get rewarded for supporting my projects, then go to patreon.com/ftapon. That's where you can pick up some remarkable rewards for as little as $2 a month. Now, 5 quick favors. Number 1, subscribe to the WanderLearn podcast. 2, download it. 3, share it. 4, review it. And 5, sign up for my newsletter at wanderlearn.com. Our theme music was composed by Eric Stratman. This is Francis Tapon, encouraging you to wander and learn.